All right, good morning. Good morning. We are live. It is a bloody morning here for the market. We're down another here. Take a look. We're down another 2.7, 2.8%, and we dipped below 18,000. A big dump off here early this morning. We did get a little bit of news. It was after that dump off began. At 7:30 Central, we got the U.S. unemployment rate. That came in at 4.2 versus a 4.1 forecast. Non-farm payrolls, 228K versus a forecast of 140K. And U.S. average earnings year over year. The actual on that was 3.8%. The forecast on that was 4%. So we'll see if we get some kind of recovery here. Some kind of a bounce. I mean, I'm looking behind me, the daily. You can see it at the bottom of your screen. But if you zoom out on the daily, it looks... It is bloody. This daily here, this only shows the New York session, which is why it doesn't look quite as bad. But, man, the market is tanking. That's what we wanted, right? I mean, last week we were at, what, 20,000? We were talking about, hey, if we can get a move downside to potentially 19.7, 19.5, and just get down there for terms of volatility, that'd be great. Well, here we are at 18. So, honestly, I'm not complaining. This is going to light a fire. Which, as a trader, it's like, well, volatility by any means necessary is genuinely how I feel at this point. Even if the long-term stuff takes a beating in the meantime, that's okay. So we are about 6 minutes out here from the opening bell. I'm very curious to see whether this ends up being a trend day, a channel-driven day, whether we end up doing limit order reversion scalping or maybe stop limit entry continuation trading, which we haven't had the opportunity to do very much lately, but we'll see what we end up getting here. Good morning, guys. How you doing? Now, listen, a lot of people might be telling you guys, hey, you know, no one should be trading today. Time to take an early weekend. I don't know if I necessarily agree with that. I think not only is today a great kind of day to sit in the chair and get experience, but if you get a good setup, whether it's a good trend or a great channel that you can hit a whole bunch, you can make money. The fact that the market's down has almost nothing to do with us as traders, except for yesterday being down. We went over 5% in the red yesterday, and the only reason that really is relevant to us is because it can be a rule break if you're trading prop, which most of you probably are. Good morning, guys. Lucas, what's up? Eric, good to see you back as always. Seth, how you doing? Jude, good morning. Adam, how you doing? Rufio, good morning. Eric, passed a 50K eval this morning. Good work. Brian, how you doing? It's always the same people in the chat. I love it. It's like a consistent group here. Okay, so 4 minutes out from the open. Again, I'm going to give this market a few minutes, as always, after the bell. Let those institutional orders trigger, and then we'll see what kind of setup here the market starts to form. Oh, by the way, I do have an update for yesterday. You guys, I don't know if you saw I made a community post. So yesterday at the end of the stream, I was down, I think, 365, which is like a blip. I mean, you could almost call that break even, but I feel weird saying that because that's still like, that's not like a tiny amount of money. But we were down 365, and then I kind of waited. The middle of the day yesterday was a little weird. I ate lunch, I came back, looked around, kind of sat. Then I got two nice setups that I ended up taking. I didn't take them in the take profit trader accounts. I just took them in the Apex accounts because I haven't gotten an email. I never got an email from Take Profit Trader about the 5% thing. So I was like, you know what? These are 150K Take Profit Pro accounts. I'm not really into risking them with a 5% down day rule break. If that is the case, I didn't know where I sat on that front. So I just traded the Apex accounts, caught two good trades, and I ended up, forget the number. I think it was like $1,300 or something. So another base hit green day yesterday. We'll see what we can put together here today. We have the bad day trader and the boring trader. Good morning to you two. Jtron, what's up? Chris, good morning. Peter, how you doing? Good to see you back. All right, 2.5 minutes until the action here starts. Do we get a bloody day all day? I'm very curious to see. Here's all the 5 minutes looking. 5 minute looks bloody, huh? Boric, good to see you back. Peter. Gumby, Skeptic, what's up, guys? Liberty, how you doing? Jet, good morning. Paquette. Been thinking of skipping the morning and just start after lunch into power hour. You know, that, I mean, that's a thought. What you should really do, the best way to make that decision is you want to trade all day for a few weeks, really small. Just trade small, still try to make money. Don't just waste your time, but if you have an edge, trade all day, 6 hours a day, but just trade really small. Then load all your data into either Excel, Google Sheets, TraderView, whatever you want to use, and then break it down by hour. And then you'll determine, okay, when do I perform best? And then it's a personal decision. Do you want to trade all day? If you have edge all day, when you look at that data, you're like, okay, well, I make money all 6 hours of the day. Then it's like, well, do you just only want to trade for the 1, 2, 3 hours that you make the, most per hour? Or if your goal is just money, then you probably should trade all day, even though you make less per hour, maybe in the later hours, or maybe in your case, the early hours. All right, opening bell in 40 seconds. Let's see what we get. I'm just going to trade like normal today. Back to trading. We'll trade the same accounts. Obviously, I can trade those two take profit pros that we had to hold off yesterday because it's a new day now today. So I'll be trading my. What do we do here? Yeah, I'll trade 7 funded Apex accounts, various sizes, and then 2 150k take profit pros. We'll trade those. So what is that, 9 total? So we'll trade 9 total here today. See what we can put together. There is the bell. Not uncommon to see a little pop here off the open in a day like today, but it can certainly be short-lived, so we'll see what we get. So for me, as far as trading, well, we'll talk about news here in a second. As far as trading, I like to separate, just in my head, pre-market from after the bell. After the bell, it's just different volume. You get an influx of new volume. And here's that pop like we just talked about. So really, as far as channel formation, I prefer to start it kind of off the bell if I can help it. So that forces me to wait at least a few minutes and see what we can get. I'm wondering if this is the start of a bear market. Yeah, you know what? I was thinking about this. I was running some numbers, I think Wednesday, and I was like, well, by definition, at the time, I don't think we were there yet. I'm curious if I don't know where we sit now, but to actually start calling it a bear market, a few different things have to occur. But you know what? Again, as traders, do we really care? I mean, that much? A bear market as a trader is almost a good thing because we know that, the bears in the very long term, historically in the United States, are going to lose. Okay, so if we're getting a bear market, what does that mean? Usually it means much more volatility than normal, which is good for us, right? Because a flat market, a really slow, grindy market, it's tough. It can be tough. to make as much as you could in a volatile market. So as traders, right, I mean, if you can make as much money as possible, even if the market's tanking, it gives you, what does it give you? More revenue generation to then push into long-term stuff at cheaper prices, which you know, ideally, with a high probability, will be up before you need the money, because if it's a real long-term outlook. So I would prefer, honestly, I mean, I hate to say it, I'd prefer to sit in a bear market just from a us first perspective. That's a good thing, at least temporarily. But for the, for the country, I sit on both sides. For the country, obviously, it's not a great thing. So I'll take either way. Okay, well, there's that pop and drop, just like we discussed. So 833. Gonna give this probably at least a couple more bars here and see how this develops. At least. See if the market puts something together for us here. Now, something that we haven't seen, do you guys see that range? We're sitting at 53 off the open. We have not seen that lately. And these last two ranges, which are the orange, yellowish bars, those are higher than we've seen, even off the open in the last few weeks, 2 weeks. For context, those of you guys who maybe weren't here a week or two ago, at least on the stream, that teal kind of flag at the bottom of the screen that says 56, at this time a week and a half ago, it was not uncommon to see that somewhere between 20 and 30 and quickly fading to 15. We saw that at 12, 30 minutes, 60 minutes after the open, which is and what that means is it's the average range of a 2-minute bar, and that's 12 points. So that was tough. That was frustrating. Again, we were still able to get base hits all week, but I'll take volatility over none any day. So this is looking nice here already. Okay, pushing through that low off the open. Now again, if you look here at the 2-minute chart, well, actually the 5-minute will give you even better look. See those wicks on that little stair step up pattern we got out of the hole for the last like hour or two heading into the open? There's going to be some stops there, but not a tremendous amount, right? Because those are pre-market levels, and really you're going to have people who entered on pre-market and held through the open with stops down there, which is not going to be a tremendous amount. And then people who entered late after the bell and then are setting stops based on pre-market levels, which is also a little bit less common of an occurrence. We just want to look at things that are very commonly seen and done. So like that wick off the open, that may become a stop level that we look at later in the day. We'll see. Yeah, market's heavy here off the open. We're getting a little bit of development here. Again, still going to give it another bar or two until I really start considering patterns. While we wait, guys, hey, my daily pitch here. Please hit the like button. That's it. Helps out tremendously, helps out the stream, helps get it recommended, which is obviously very helpful. And even a few people doing it, it really, I'm not kidding about this. It does help a lot. Off topic, Nico, but are you an advocate for dollar cost average investing or lump sum and forget about it? They both can work. It depends on, I think, how long and how much money we're talking. But just painting with a broad brush. Well, it also depends on the price of the market at the time and how deep of a hole we're in and what the economic outlook looks like and how much you care. I think lump sum from an uneducated perspective, like if someone wins the lottery and they know nothing about the market and the market's at all-time highs and it's probably a little bit inflated, and they're like, I was just told to buy the S&P, I'll just buy the S&P, and they buy the S&P at inflated all-time highs, and then we have a 4-year dip, which can absolutely happen. Well, then you know what I mean? They should have dollar cost. But if you come into, if someone were to sell a company and make 25 million, and they're like, okay, well, we're in this horrible economy, I just got lucky and sold my company at this time for a lot of money, the market's way down. It's like 30% off the highs. Should they really dollar cost average, or should they just lump sum and bet on the US? Well, in that case, I would just think lump sum, at least a decent percentage, not all of it necessarily. But for most people, the answer, I would say, dollar cost average. But I'm just some trader. Hey, Sovereign, welcome, brother. News data. Is Forex Factory sufficient enough? I haven't used it. I like Financial Juice. It's free. You can also have a subscription. I think it's like $100 a month. But it's good. Okay, here we are coming into 8:40. It is about a minute 20 away. And we are getting a little bit of pattern development here, coming into that low here. This 2-minute shows it a little bit better. Coming into that pre-market low again. There will be some stops there, but not a tremendous amount, right? I mean, what are you guys thinking? We're down 3%, 3.1%. Are you guys thinking we see another 5% red day? Wouldn't that be something? Back-to-back 5% red days? Jesus. Scooby, it's really hard to tell. What do you think of the non-farm payrolls and unemployment numbers? I think it's, in this market right now, I think, you know what, you get a little bit of volatility at 7:30 and then everyone's kind of over it. Rob, someone reported, I think, that when MSNBC or some of the major financial networks report market catastrophe, if you buy the S&P 500 ETF, which would be SPY, or one of the others, the average profit is 40-50%, I think, in a year, they said. Yeah, I don't know anything about that. But that's interesting. I mean, again, the whole like dollar cost average or lump sum, it depends, I think, on your education level, how much time you want to put toward it, where the market sits when you come into the money. Or if it's just income over time, then maybe dollar cost average is the way to go. But if you're someone who comes into a lump sum, there's a couple different ways you could go about it. But I think it mostly depends on your education level, how much you care about actually paying attention to the market. Because some people don't. Believe it or not, some people don't give a shit about the market while we sit here and watch it all day. Okay, so here we are pushing lower. We just pushed through that wick. One of those pre-market wicks. All right, well, we are well into 840 territory, so we can now start looking for good trade setups here. You guys know what I'm looking for, right? I mean, if we end up forming a channel, meaning this widens out a little bit, I'll channel scalp, reversion scalp with limit orders. But we're getting a little bit of red, green right now, so I'm really looking for my my little continuation setup that you guys know a lot about by now, probably. Zachary, 2 weeks of trying to pass evals, 60% win rate, but average loser is double my average winner. That's a problem. I need to hold to full profit. If you're going to take off winners early, you need to plan ahead that you're going to do that from the start and then make sure your win rate is sufficient to cover that. You know, a lot of people, what they do is they'll assume in their head, they're like, okay, I just need to win, 55% of the time. But they, no one's going to cut their losers early, at least in the early stages, right? Because no one wants to have to do that. So they let their losers run to 20 points or whatever, their full stop losses. And then as soon as something goes 10 points in the money, they pull it off. And what you end up with is winners that are half the size of your losers on average, which is fine, by the way. That's not the end of the world. You can make a ton of money with a negative reward to risk ratio if your win rate is enough. But you have to be taking setups that can give you, like a 75, 80, 85% win rate. If you want to end up running negative reward to risk. Time in the market is always better than timing the market. Timing is hard. Yeah, as far as investing, like long-term stuff, I'd agree, but I think that's true for the average individual, not necessarily everybody. But trying to buy the bottom, I agree, is kind of a fool's game, though you can get close. But you're not going to bottom ticket. Do you have any channel videos on your YouTube? It's a good question. I'm not sure. I'll have to check. But there will be. All right, here we are getting a push upside. This looks to me like we may be developing, a descending channel. But we have about one touch point on the top and maybe two on the bottom. So we'll see what we end up getting here. Eric, I just took a straight swig of apple cider vinegar to get ready for this day. Now he's locked in, he's in the zone. I can't believe we tested below 18,000 this morning. When I walked in this morning and saw that, I was kind of surprised. Yeah, that ATR is sitting at above 60 right now, which is just beautiful. So this looks to me like we may be seeing a channel developing, but again, this would just be the second touch point test since the opening bell, at least. currently sitting here. We are at the 20 EMA on both the 5 and the 2 minute. They're kind of lining up almost exactly right now. So it is probably going to be an area of interest, though. Again, it's not enough for me to just like short. Not at all. Not in the face of this like attempt at bull strength. Now, as far as buying continuation, if we were to see like this 2 minute bar close near the high, in a more open sky scenario, that would absolutely be, hey, I buy the rollover if that were to occur in 90 seconds from now. Right now, I'm looking at this potential for a descending channel. And looking at this, it seems to me that the market is probably going to at least try to respect that. But again, for me, for the way that I prefer to trade, taking that early of a short just on the second test, there's no window there, really. It's very wide, and even with a 40-point stop, that ends up being a very tight attempt at a reversal. Which is why I wait, you know, it's not just arbitrary, that's why I wait for my 3 touch points. Still getting stuck around that 20 on both the 5 and the 2. We're starting to pull apart a little bit in terms of where those two sit. See here, like the 5 minute, 2 minute. $18,140 to $18,170 looks to be many sells, question mark. Yeah, so we're seeing, what I think we're seeing here is buyers hesitating a little bit because they're unsure where we're going to see a channel test, and sellers maybe early sellers, which doesn't make them wrong necessarily, it just makes them low probability, high reward to risk traders, maybe trying to short this second attempt at a descending channel. Because what a lot of people here, I'm sure, are looking at is this and saying, okay, well, we might see this, and that would put us maybe about here. So let me short this region here. Maybe I'll front run that a little bit, short that, and get a low probability, high reward to risk trade. I think, to me, that's what looks to be going on. I prefer not to trade that low of probability, but again, you can make a lot of money trading low probability if your reward to risk is very high. You just take a lot of stop outs, then boom, you catch that off, big winner. I've seen some guys who scalp only 2 ticks on the NQ, only 2 ticks a day, but are trading 70 minis. It's insane. Yeah, so in my experience, I think scalping any less than a few points on NQ is really tough. I think there are quote unquote easier ways to get the job done, but there are infinite ways to make this work. So yeah. That's crazy though. 2 ticks on the NQ with 70 minis. So here we are. The bulls are really trying to take it through. Again, this is an attempt at forming a second touch point on that channel. You know, this second touch point is very important because when you only have one, really, where that second lies, it becomes like a very pivot point. Like there's really... It's a huge range. Like you can see the rejection anywhere if you get one at all, which is why shorting here is such a low probability trade that does have really high reward to risk. Because again, you should keep your stops very, very tight, at least relatively tight, for someone trying to short this, and you take quite a few, and then eventually maybe, again, you catch a big short that ends up being good for, I mean, hell, 100, 150 points maybe. It's just at the end of the day, do the numbers work? Yeah, scalping very tight ranges like that is very common in the institutional world. But for retail, I think it can be done. It's just more difficult. Plus commissions. They start to add up more, become more of an expense for you. But again, that's okay, as long as the numbers work. Hey, Gaines, appreciate you, brother. Here every day at 15 a.m. Central, we're live. Okay, so there you go, guys. We got some of those sellers ended up being right. You see what I mean? Low probability trade, probably take some stop outs, but if you keep trying, if that's the way you want to trade, by the way, that's fine. But you know, that trade was good for, I mean, what, 50 plus points. And if they're still holding it, it could be good for more, but you take a whole lot of 5, 10, 15, 20 point stop outs trying to catch it. So your win rate ends up going way down, right? But your reward to risk is very high. It is a way to trade. You can do that. All right, big bear bar, closing near the low on the 2-minute chart. On its own, to me, that doesn't mean a whole hell of a lot until we get some kind of sequence. Now, again, up here, worth noting, guys, this 2-minute bar closed inside of this wick here. I would not call that arbitrary. I think that tells us something. Had we seen this bull bar close like near the high here, what does that tell us? It tells us the most recent information is the bulls are saying, okay, we don't care about this. Take this thing higher. I'm willing to buy up through here. But the most recent information on this 2-minute bar here is the seller's bringing it back down and the buyer's not really willing to take it back up above here. I mean, it's these little things that really tell a story about the balance between buyers and sellers at any given moment. Eric says, I found big oversized candles make for poor trade patterns. I would tend to agree unless we see big oversized candles. They're all big oversized candles and then they're all kind of just normal candles. But if they're outsized compared to the recent volatility, I would tend to agree. Look at this range, guys. We're seeing 100-point range 2-minute bars. We haven't seen this in weeks. Weeks. Actually very good to see. What we've needed lately is volatility, and we are getting it here. Now I need a pattern. 120 120 points on this bar. 5 seconds left on this 2-minute bar. 120, my goodness, 130 points. 130 points, 132 point range on that last 2-minute bar. I think that's about the biggest bar we've seen, at least that I remember, in the last 2 weeks plus. Now, something to think about if you're trading, by the way, on a day like today, if you're someone who trades really tight, like 5, 10, 15 point stops, something to think about here. You don't have to. Maybe you size down your size and widen out your stops and take profits. Widen out the ratio, size down your size. You end up with the same dollar amount reward to risk, but you're giving things more room in a high volatility environment. As for me right now, I think we're probably going to see this volatility start to taper off a little bit as we head past through 9 o'clock, slowly but surely. So I'm going to stick to 40 point automated stops and take profits going out. And then I might adjust if I need to after I'm in the trade. Yeah, it's good to see volatility again. It'd be better to see volatility with patterns, so let's see if we can get some here. So I'm looking here, seeing stops above here. You know, in this volatility environment, if we see a crack above this kind of after open wick, because that was the opening bar, it wouldn't surprise me to see maybe a 15 point pop on those stop losses getting triggered, because those would be buy stops, right, with shorts putting right above this wick, which is kind of a sucker stop, to be honest with you. And you might see a 10-15 point pop, just liquidity pop, pretty quickly through that break. But you can also see, you know, a 30 point rubber band snap back after the fact. We're going to pull back to the 20 EMA on the 5-minute, especially 5 minutes top left of your screen. So now we've kind of developed that range, right? And we're sitting inside of it. On the 2-minute chart, you have here to kind of here. If we can see a nice ascending or descending, I don't care which, channel developing, that would be good for some limit order scalps. But for continuation, I would need to see a breakout of this channel, just because otherwise you're kind of in a shrinking channel. I find those don't work very well for my continuation setup personally. Do you ever take trades on the 5-minute? Yes, absolutely. Absolutely. But I think I just prefer the 2 in probably most market conditions, at least lately. The 1-minute on futures. Okay, I find the 1-minute works great on momentum stocks, like pre-market small cap momentum scalping. For futures, I think the 1-minute for me gives me a little too many low quality setups. Now, understand that the lower time frame you go, the more setups the market will give you if you're trading price action, right? But the quality starts to fade. And then the higher time frame you go, the less setups you get, the less setups the market will give you, but the higher quality they tend to be. So what time frame you should trade on really is a question of balance. What gives you the most amount of the best quality setups possible? So on the 5-minute, the average setup might be slightly higher quality, but I don't get enough of them to beef up my sample size, which is really the goal here, by the way. If you have statistical edge, you don't want to take one trade a year. Because, you know, would a casino deal one hand of blackjack a year and be like, okay, our year ride's on this hand, baby, let's go? No. I don't know the actual number, but they deal probably millions of hands. Get the sample size up, make damn sure their edge plays out. As a trader, that's the idea here. Yeah, Thinkorswim, it is a great platform for charting. I prefer it for charting, really. For actually trading, I think it's a little slow. But for charting, it's fantastic. It can be a little heavy on your resources, more so than other platforms, but I've used Thinkorswim for years, and I'm a big fan of it. All right, so we're testing that 20 EMA now on both time frames, the 2-minute and the 5. This looks to me like instead of a descending channel now, we may be beginning in the early stages of forming a little ascending channel. What I don't like about channels like this is when you get one big bar causing the down test, one giant bar on the up test, one big bar on the down test. I prefer to see maybe it take 4 to 6 minutes between each test, because then you get cleaner, usually price action, rather than chop around channels. How many trades do you average per session? Depends on the market. Yesterday I took 5. Last week I was taking 1 to 2 a day, which is extremely low for me. In a market that's really clean, giving me a lot of setups, I might take 10, 15, 20 in a day. So, you know, the average, I don't know, 5 to 10. Plus, probably. See if we get a development here. But that's on futures, by the way. I'm not including everything. Well, here's that third touch point. I mean, really, the attempt, that's very aggressive, by the way. The more aggressive levels get, in my experience, the less reliable they tend to become. So here's the test of the third touch point. If we can get a nice, strong bounce out of the hole, all of a sudden that trend line is something I'm interested in trading on the fourth touch point. And by the time we were to get to that point, if that were to occur, it would be lining up with the 20 EMA, probably on both the 5 and the 2, which just adds to the idea. Let's see if this can even hold to begin with. Kind of a sloppy close here. If we get continuation, I'm absolutely not against taking a continuation scalp. If we get a downside continuation setup going here. Actually, for a lot of reasons, I might prefer if we get downside movement here, because then I could look to stop hunt either here or here. Probably not both, since they're 70 points apart, 65, 60, 65, 70 points apart. But at least one of those. I'd love to stop hunt down there. All right, 1:20 out from the close of this bar. If we see this 2-minute bar close a little bit more sizable than it currently is at or very near the low, I will sell the rollover here in 45 seconds. Let's see how this closes. I don't want it to expand too much though. Big bars increase the probability of snapback. All right, 25 seconds out from the close of this bar. If you can stay put right there, don't size up too much now. Wow, those buyers are stepping in. Come on, sellers, bring me down. Nope, wicking back up, no trade. See that big wick back upside? Buyers stepping in the last 5-10 seconds. So now we see how this next 2-minute candle develops. Same idea here. I'm looking for this bar to close at or near the low, though I'm not a big fan of that wick in the last 10 seconds on that previous 2-minute. But if we could get a nice, clean, not oversized bear bar closing at the low or very near the low. Here we are testing that wick, getting a few stops getting triggered there. 50 seconds out from a close of this bar here. I want to leave room. I want to leave at least 40 points of room before we test the low of day, which is right around 18,000. I don't want to have to push through low of day ideally to hit target. I just would prefer to use that idea as exit liquidity on this trade. You got to think ahead. 20 seconds out from the close here. I don't want too many wicks back upside, or too much of a wick back upside. All right, not too much more now. Come on. All right, I will try to sell the rollover there. Not filled. There we are. I'm filled. And I'm sitting short on the rollover of that 2-minute bar. Target down at 18,006, right ahead of the low of day. I'm fine with that. And I would cut this baby down up at 18,086 and a quarter is where my stop currently sits. So 16 points in the money right now. Just need to see a test of low of day. Obviously not low of pre-market, just low of after the bell. $15 points in the money. Again, average short price is 18,046 and a quarter. Stop 18,086 and a quarter. Take profit down at 18,006 and a quarter. There we are, 25 points in the money, 30 points in the money. Give me 10 more points down for a test of that intraday low. Might see a little hesitation here. Let's see if we can't get a little bit of a push. Need about 8 more points. Down through 18,006. Getting a little bit of buyers stepping in down here at the low. I'm going to let it sit. See if we can't get a push down through 18,010. Kind of struggling down at 18,010. I'm gonna let it work. I don't want to pull it off early just because I feel like it. There we go. And we are out there on that big. You guys see that? We got some stops, right? Triggering through there, down through 18,000. Good for about a 10-point move downside. That's fine. I'll happily take that off right ahead of that low. Good trade. Okay, so as far as P&L, I think... Where do we sit? I don't know. I think this is how we sit currently. I think that's like 1,300 bucks. Let me do some math. That was a beautiful rollover on that weakness. That was a good trade. I'm proud of that trade. And honestly, honestly, had that bounced and stopped me, I would still be proud of that entry. That was a good entry. I'll pat myself on the back. I have no problem doing that. You guys should do that as well. All right, let me do some math here and figure out where we sit so far after that trade. I wish Ninja Trader would just add it all together for me. It's a little more than I thought. We're up 1436 so far on the day. All right, let's keep looking, see what else we can grab. One trade in so far. What a beautiful push through 18. This is that moment where you're like, damn, I should have held. No, because we very easily could have seen a lot of buyers like, nope, 18,000 and low of day, I'm buying there. And those are two levels that I thought ahead for a reason to have my take profit right ahead of 18, right ahead of low of day, which it was. You guys saw my take profit was 18,006. Low of day was 18,004. That was on purpose. But we did get a beautiful break of 18. And it's crazy, we're in the 17,000s. We were above 20K after hours a couple of days ago. Wednesday after hours, we tested above 20,000. Yeah, Steam, I agree. You know, get your piece and get out. The whole hindsight FOMO thing, it doesn't bother me these days. Chris says Affordable Indicators has an indicator that will add up all the different prop firms that you have in Ninja Trader and put them in chart for you that includes all your profits and losses per account. Oh, beautiful. I gotta check that out. Yeah, I have a calculator in front of me and I'm running like 20 numbers all the time. Quicksilver, you've been the short king these last 2 days. Catching big old moves. All right, here we are, continuing downside. We're pretty much at low of day here. Obviously, if you want to look at the 5-minute top left of your screen, you can see that we still have that wick, that kind of that hole from pre-market, about 2 hours before the opening bell. But here we are getting an aggressive move downside. We have a minute 50 left on this 2-minute bar. I'll be back in 2 minutes. All right, we are back, baby. We're getting a little bit of a bounce. Bulls trying to make an attempt. We'll see if they can. With a big bounce like this, ideally, I'd really want to see at least 3 consecutive growing bull bars with the entry bar closing above the 20 EMAs and at its high, which is a big ask. But I mean, look at the market. It's down 3.5%. Market has to prove, the bulls, I should say, have to prove themselves to me before I get on their side. Well, reclaiming 18,000 here. Now, if you look up top, ultimately, we have, someone might argue that there's 2 touch points here, right? But that's a very aggressive descending channel. Those don't tend to hold for very long, especially in the midday when volatility kind of collapses a little bit, comparatively speaking, to the open. We do have this potential level here. So I see the early stages of a potential descending big wide channel, but ultimately it's so wide that I would probably prefer to take continuation trades inside of the channel rather than reversion, because when you get a big wide channel, guess what? The range of the levels widens out with it. So I find it's a little tougher to kind of time that entry. Whereas continuation for the upside test or downside test, preferably, of the same channel, gives you plenty of room inside of the channel because it's so wide to hit your take profit. But I think the risk is a little better. Well, here we are getting an attempt at a 3rd consecutive 2-minute bull bar. See if the bulls can make this happen here. All right, so we are testing the 20 EMA on the 2-minute. Very well may see a rejection here off that 20. It's not enough for me to take a trade in the face of that attempt at bull strength, to be honest with you, but if we do, that's another touch point in the descending channel. That would make the channel about 120 points wide, which is enough. It'd be enough to take continuation trades inside of it. But I gotta see what we get here. Goodness, guys, look at the gaps. Look at the gaps. Look at the bottom of your screen. The gaps on your New York session only daily chart are 1,000 points each. That's pretty wild to see. We certainly got volatility that we were after, right? Sean, yep, we took one nice short through here, and we're up about $1,400, a little more. Looking for another trade. Yeah, so this looks to me like we're seeing those early stages of a descending channel. Couple touch points here so far. But, I mean, you know, I would love to trade continuation through. However, I would need at least like 45, 50 points of room before an obvious test. And when you get this bar, you know, I mean, it's what, 60 points wide? Or 60 points in range? That hogs up the channel. And I need at least 2 of them to make an entry. And that leaves me with less than my 45, 50 points to hit target before an obvious downside test. So you gotta be thinking ahead on your trades. If you guys haven't yet, please press like on the stream. Helps out a lot. Appreciate it. Chris, how is this week? How has the week been treating you? You can see I posted recaps for most of the days this week, I think. And then, yeah, most of the days. There wasn't a recap yesterday, but instead I made a community post. I've been green every day for the last, I think, 2 weeks. But they've been base hit days mostly. Volatility last week was really rough, but today we're fixing that, which is good to see. Okay, now I'm really interested to see if this turns into a descending channel that calls for limit order reversion scalps, or a continuation attempt at a downtrend, which then calls, of course, for continuation trading. Yeah, so the Nasdaq's currently down 3.8%. If we end up 4% down, then 5% may be on the table again. And by the way, if you're trading prop, you got to be careful because some props have rules. Apex is not one of them, which is, by the way, currently 50% off. And single day pass if you use code BIG, B-I-G, best deal always. All right, there's low of day, at least after the opening bell. Obviously not low of day in terms of pre-market. You see the 5-minute chart, top left. And by the way, I would imagine that down here, there's going to be some stops below here. Maybe even enough to test 17.8. If we get a push below there, which is still quite a ways away. Once you get enough padding in your account, you usually go back to trading minis. You can, and depending on the account size, I will. However, I prefer to, I think, for me, trading prop, I think it's relatively obvious the way to do it is to scale horizontally, not vertically like everybody seems to like to do. Vertically meaning you start trading really big per account, Whereas I think you should keep the size per account relatively small and scale just with more accounts at more prop firms. That's horizontal scaling, not vertical scaling. All right, there we are getting a push downside. Here's how this bar closes. This bar here would be the third in the sequence. If we can get a equal size or growing bear bar on this bar, at least the body of the bar, since most of this bar has been green now in the last 20 seconds, closing at its low, then I will sell the rollover for the test of that pre-market low. But yeah, for prop, I think ultimately you should think about at least scaling horizontally, not vertically. Everyone likes to scale vertically, and that's what you see online because big numbers per account is impressive. But ultimately, I don't think that is the best way to think about this. You're just tempting blow up way too often. Which, by the way, if you're trading prop, you need to have a business plan. I think the best place to sit is trading aggressively, but small enough where you're not terrified of blowing accounts. Blowing accounts doesn't make you horrible. As long as it fits in your business model, your business plan, which you should have for prop trading, which consists of 3 things, by the way. How much are you willing to invest in it? How long on average do you want to keep a funded account, which determines how aggressive you go in your sizing? And then 3, how much revenue generation are you looking to get out of that initial investment? That's your business plan. And then try to stick to that to the best of your ability. And size yourself to hit that target timeline of how long do you want to hold on to the average account, which again determines how aggressive you are per account. And then scale horizontally. If you max out horizontal scaling, which will take you a while, by the way, if you want to scale vertically, then fine, but you'd already be making so much money that at that point you might be looking at other avenues anyway. Okay, so that bar turned into a big old gravestone doji. So now I'm looking at this next bar to see if we can get some kind of entry opportunity here. Rob, saw someone leave a lot of padding in their 20 apex and went tilt and lost 200,000 they could have taken out. Yeah, see, that's the problem with scaling vertically. You're trading with your own money. Everyone says, oh no, it's house money. No, it's your money. It's yours. You can take it out. I will never understand the mentality where people leave in that much padding. A little bit of padding is fine, but leaving in that much padding to me is insane. Take the money out and trade personal if you really want to continue to trade that big. I don't see any reason to leave that much padding in a funded account. I guess people maybe are trying to avoid the money hitting their account as a contractor and then having to pay taxes on it. Maybe, I don't know. That's a weird mentality though. Just take the money. All right, well, Bull's trying to take it up, which is showing me a lot of potential here for a descending channel. Yeah, you know what? Ultimately, I think the reason people leave money in the accounts to trade huge. Ultimately, I think it's like an ego thing. Everyone's like, I want to have that $1 million payout. Why? Who cares? Take a whole bunch of smaller payouts and you'll make more money. People just want that leaderboard screenshot to post on social media, which tells me they value clout more than they value money, which I think is absurd. All right, Bear's trying to take it back downside here. Now, if you look at the 5-minute, see that low on the pre-market or in pre-market was 17,820. So if we can leave some room ahead of 17,820, that would be a setup for me. I'd probably want to see it close on this bar no lower than 860. That's kind of what I'm looking at. Got 65 seconds left on this 2-minute bar. All right, 17 seconds out from the close. We're getting some wicks on this 2-minute here. We can get a nice little, I needed to grow a little bit down toward 860. You're ready either way. 5 seconds out. No, close at 880. Not good enough for me. We'll see if we can continue downside through that pre-market wick. Give me a decent setup here. AC Trades just snagged 18,000 down to 17.9 after spotting it. Good trade, nice work. I think, yeah, I caught a little bit before that, I think. Yeah. Heading down, yeah, profit take right into 18,000. Okay, a minute 15 out from the close of this 2-minute bar. If you look at the 5-minute chart over here, now that low is at 17,820 approximately. So I'm interested maybe in thinking about stop hunting that region, but a lot can change here in 60 seconds on this bar. Oh, by the way, I don't think I mentioned another thing I'm thinking about here is the potential of a descending channel. Right, you could see buyers seeing this region as support and wicking it back up, which we've been seeing them do, which makes me think twice about that potential entry unless we really break through hard. But I don't want to enter on a 100-point range bar, right? This is a huge balancing act as far as making discretionary calls like that. But yeah, you see these bulls stepping in. I think they're seeing a descending channel, trying to buy that dip. Now, also worth mentioning, we are now down about 4.25%. So if we end up going down to 5, I have to think about that now too. There's another thing on my plate. As far as the take profit accounts, I have to make sure I have room before hitting 5% in any short entry that I take, so that I don't end up breaking a rule and losing 250k accounts. Brad, like your 40-point room to breathe. You're making some nice trades lately, learning a lot. Good to hear it. Yeah, in this market environment, I think for me, 40 is a good place to sit. Sean, 5% is 17,742. That sounds about right. I appreciate you dropping that. So, really, I wouldn't want to take an entry below 17.8. That leaves it kind of tight. I don't know. You know, I really wish these props take profit. Send me an email. Tell me what's up before we get there. All right, Bull's trying to take this baby back upside. This absolutely looks like the start of an aggressive descending channel, which these aggressive channels, they don't hold all day. This will absolutely break at some point today. I prefer a little more timid channels, but today, I mean, that's asking a lot of this market. We're down 4.2%. All right, here we are, testing low of day again. Again, we have that pre-market wick to think about at 820, about 35 points away, 40 points away. Yeah, but take profit really is a cool prop. The way that they set up their like wallet and everything, it's so convenient. Daily payouts. It really is like your money. I love Apex for trying to scale. But, you know, you have to jump through a few more hoops. Once you're in the account, 8 trading days, play by the rules. Take profit. Like once you get into a funded account and you kind of get at that buffer, it's kind of like a personal account. It really is an awesome prop. Which, by the way, 30% off, no activation fee. Use code BIG at Take Profit Trader. Best deal always. But I love both Apex and Take Profit just for different reasons. But the way that Take Profit has their portal set up really is cool. Yeah, these bears are really seeing this descending channel and trying to buy that baby back up. I'm not sure with these sad attempts. I mean, look up top. Look at these sad attempts at taking it back upside. This is just kind of a flat bottom here now. A downside break wouldn't surprise me, but we'll see if we can get some kind of setup forming here. Again, as far as buying this descending channel with these soft, mushy bounces, I can't buy that. I would sell the resistance level if we can get a third touch point, but right now what I'm looking for is either a third touch point in this descending channel, and then I would take the fourth, or continuation to the downside is really what I'm looking for. As long as it's not an entry ahead of, below 17,800 with the take profit accounts, because I don't want to hit that 5% threshold while I'm in a trade in the take profit accounts. A lot to think about. Got to stay on top of it all. Yeah, Rob, a lot of people don't realize that with take profit, with some of the accounts, the deal they're running right now, since there's no activation fee and it's 30% off, it actually is cheaper than Apex, which is crazy. Yeah, Tradeify straight to funded is cool as well. That's a cool idea. Might start hitting some of those Tradeify accounts here soon. All right, let's see if the bears can take it down through this flat. Oh, we never talked about news. Thank you, Anonymous, for the reminder. Okay, 10:25 Central. That is 40 minutes from now. Powell will be speaking. Now, this isn't 2022, so I don't think we all need to absolutely sit on our hands, but I will be paying attention to that 100%. And then at 11, we have the Fed's Bar speaking, which, not too big of a deal. And 11:45, the Fed's Waller will be speaking, which again, not too big of a deal. But Powell at 10:25, again, 40 minutes from now, I will be paying attention to that. That's about it for news, though, today. Least expected news. Can always get something hidden. All right, here's the test of that bottom. We move that out of the way for you. Now, the shorter time in between a bottom forming and a bottom getting tested, the less stop losses are going to be there for liquidity, right? The longer standing a level is throughout the day, the more stops are going to accumulate in that zone, and you can use that for liquidity for a 5, 10, 15 point pop through if you want to do some stop hunting. But here, these levels are getting formed and retested so quick that I don't want to be taking those trades personally. All right, now remember we have that pre-market low, that hole that we saw in pre-market 10 points away now, down at about 818, 17,818. So we're testing that currently. I do believe there's going to be some stops here getting tested now. Let's see if we can get some of those stops triggering, pushing us down for a test of 17.8. Let's see if that occurs here. Yeah, VIX, and also I saw the fear and greed index came through, which I just think is interesting to look at. It's at 4 out of 100, which is obviously extreme fear. Just an interesting look, doesn't really help us too much, but all right, there's those stops triggering, heading down for a test. There you go, there is a test of 17.8, exactly like we talked about, and there for me, damn, is the cutoff for a short entry in the take profit accounts. So, and the reason for that, by the way, if you're just joining us, is because we are at 4 3/4% downside right now. You can see here, and with take profit, I do not want to be in a trade in those two accounts since they're pro accounts, as we test 5% loss on the day in the Nasdaq, because that could be a rule break. So I suppose I will, for now, until we see what the market does, I'll just look at trading the Apex accounts and see what we can do here. "60 seconds out from the close of this 2-minute. And we are now at absolute lows of day. Through the pre-market low, obviously low of day after the bell. And we are at 4.8% downside. We're coming into a 5% test here. We talked about the potential of this morning. Crazy that we might see this 2 days in a row. About 61 points is the range on this current bar. Getting a wick back upside. 15 seconds out from the close here, this 2-minute. Really getting a hard push. I want to wait to see how we act around 5%, because that's a big level that I know a lot of people are looking at. That doesn't give me a whole hell of a lot of room to enter on that rollover. So I'd prefer to see a test of 5 and kind of get that off the table, and then I can take an entry if we get another one here. I'm thinking ahead on all my setups here, obviously. Nico, past 5 Apex and 5 take profit trader with your guidance this week. Good work. Really great work. That's a good setup to have, 5 and 5. It's a great diversification there. And 5 take profit trader, that's an asset. You treat that with respect. Yeah, G6 with take profit. I wish this was more clear. The 5% and the circuit breaker thing happens so infrequently. In chat yesterday, when we hit 5%, we had some people, quite a few in the chat, getting emails from Take Profit. I never got an email. So a circuit breaker 7%. But I don't want to risk a couple of 150K pro accounts on one trade in case they end up deciding that that's a rule break. So right now, I'm just trading the Apex accounts now. Again, we traded all of them earlier. We're sitting up $1,400 bucks, a little more, $1,450 or so. So now from here on, I'm going to just plan to trade the apex so that I don't tempt fate with a rule break. Goodness, we are just drilling into the 17,000s. Down 5.2%. Yeah, there's that bounce that we're going to see inevitably after a break through 5. A little bit at least. Might be a sad attempt. Chris, Top Step does the same. Haven't received clarity from the futures desk. I don't believe the futures desk. Now, I might be wrong here, okay? But I don't think they care. The futures desk told me, hey, follow the rules that are obviously laid out as far as like how much you can make per day compared to your drawdown, stuff like that. And as far as like averaging in, aside from like the daily loss limit, the futures desk, they give you freedom how you trade. I would love to see those guys. Great guys, by the way. I would love to see them loosen up the like profit per day rules and let you get to a funded account a little quicker. But every prop, listen, they do things for a reason. It's a business, right? They have to make sure that they can make money. So it's not like the rules are just there to hold you down. There's a big wick. 40 seconds out here from the close of this 2-minute bar. This is really a crazy move. Okay, Chris says 17,370, I think is the magic halt number. Yeah, well, hopefully we don't get there. So the Nasdaq is now down 5%, 2 straight days. Wow. Quicksilver has just about made millions of dollars these last 2 days, shorting these 2 moves, and now he's long, he says. Scooby, pass another Apex eval. Good work. Good work. Me, I'm sitting one trade, one winner on the day, just waiting for a half-decent setup here that we can put on. But really, this move is crazy. This is really nuts to see. Hey, we asked for this. And we got, it was delivered, volatility. I mean, look at that ATR, guys. That ATR sitting at 62 at almost 10 a.m. Central. That's crazy. It's good to see compared to what we were seeing last week. And there's a big old bounce. That's about a 150-point bounce in 4 minutes, 3 minutes. Wow. Maybe 2 minutes. We have seen probably the top 5, just for context, I'm guessing, but I think we've seen probably about the top 5 highest range 2-minute bars that we've seen in the last 2 weeks, just this morning, which is nuts. Now, as far as shorting this pop, now what did I just say, right? In the last 2 or 3 minutes, we've seen about a 150+ point move. If I'm running 40-point stops, trying to short into this strength, I'm really kind of guessing on my entry point. I don't like to guess too much. But, you know, for those of you guys who trade lower probability, high reward to risk, something to think about. Take a lot of stop outs, you know, catch the off big winner. Quicksilver, Nico, you have helped me with a lot of confirmations. Thank you, bro. Past 2 combines this week. Good work. Keep it up. All right, I'll be back in 2 minutes. All right, I'm back. What did we miss? Not much, it looks like. Trying to hold this bounce. The bulls really are, but keep in mind, we're coming in now to the 20 on the 2-minute, which has been a rejection point in the recent past. So we'll see if the bulls can hold through that. Oh, look at that hole we dug and bounced up out of. That's a 200-point move. In less than 10 minutes, maybe 7 minutes. Average true range, 63 at 10 a.m. Something to see. All right, there's the test of the 20 on the 2-minute. Keep in mind, we are still coming into the 20 on the 5-minute, top left of your screen. That's up toward 18,000, a little closer to it at least. I still cannot believe those gaps on the daily chart here. That's just showing New York session. Those gaps, bottom of your screen, 1,000-point gaps. All right, testing the 20 EMA on the 2-minute chart. Acted as a rejection earlier, not enough for me to take a trade off of like strength, right? Trying to fade this strength like I mentioned previously. Trying to guess a 40-point stop window for me if I'm gonna run about 1-to-1 reward to risk is not a great strategy. But again, if you're somebody who's like really, really low probability, really, really high reward to risk, something to think about. All right, so there's 17.9. Almost 250 points in less than 10 minutes here, upside. All right, 10 seconds out, we're rolling over into the 11 a.m. Eastern bar. So might see a pop at the top of the hour here in volatility a little bit. Yeah, not much. Quicksilver, I appreciate you saying so. Been at it a couple weeks. I'm enjoying it. Hit the like button. Pass 100 in no time. Brandon, what indicator are the yellow bars on your Ninja Trader? Though that's the range of the 2-minute bar. Okay, so what I'm doing at the bottom there, I'm not a big like indicator guy. I like price action because it's real. Indicators are pretend and lagging, but some of them are somewhat helpful. Those two at the bottom, the teal and yellow, those are not really indicators in my head. It's just giving me information about what's actually happening, not trying to like tell me what's going to happen. So the yellow vertical bars is the range of that 2-minute bar. Okay, and the teal line, what I'm comparing that range to, is the average range of the last 10, so following along the last 10 2-minute bars. So it takes the range of the last 10 2-minute bars, averages it, and then plots a horizontal line in blue. And then I'm laying on top the yellow bar, which is the range of the 2-minute bar. So what it's telling me essentially is the volatility compared to the last 20 minutes. All right, bulls trying to take this higher. We're getting a different, here, look at this, guys. We're seeing a difference in Thinkorswim and Ninja. This happened the other day. That's really interesting. We're seeing a 70-point this should catch up. Seeing a 40-point difference, now a 20-point difference. It's tightening a little bit. You gotta be careful. There we go. It's starting to tighten back down. Okay, we're back. We're back to normal on the data. It corrected itself. You guys see that? If you're running two different data or charting softwares, you gotta pay attention. Hey, John, what's up, brother? Yeah, we took one earlier. We took a beautiful short. We're sitting up like 1,400 bucks, a little bit more. Looking for whatever else we can grab here. Okay, we are testing through now the 5-minute 20 EMA and 18,000. I've got Rhythmic and Tradeovate going as far as linked into NinjaTrader. Bull's taking this upside, baby. For me to get long, I would really need to see the bulls kind of erase any doubt of a descending channel here, which would mean a push a little bit higher, well through 18,000. Kind of getting stuck a little bit here around 18,000. Let's see what the bulls are able to pull off. And yeah, we are... Good call out, Skeptic. We are back into the 15-minute opening range. Kind of testing the bottom a little bit here. But 18,000, that is going to be a tier 1 level. And yeah, man, that range is beautiful. I mean, look at that. That ATR 77 at 10 a.m. Love to see it. All right, watching this previous level here. Keep an eye on that. We're testing that right now. 18,070. Just a reminder, guys, Powell here speaks in 20 minutes. 20 minutes out from Powell. Goodness, can you guys believe this move here in the last few minutes? In the last 15 minutes, we just put in a 420-point move. 417. Rejecting off that previous level a little bit. Bear's trying to wick it back down. Here's the retest, by the way, 5-minute. Retesting the 20 on the 5. Something to watch there. As well as 18,000, of course. Get a reminder, Powell here, 19 minutes out. Headline from Trump in the last 5 minutes here. Financial Juice is claiming it's part of this move. Potentially. Trump 5 minutes ago said Vietnam wants to cut their tariffs down to 0 if they are able to make an agreement with the US. Worth mentioning, I suppose. See that 20 on the 5, top left of your screen? We're also coming into the 20 on the 2 minute. Now we have about 1 touch point on each side, but let's see. This could either turn into an extremely wide, here, the 5 shows it best. This could either turn into an extremely wide descending range, hundreds of points wide, or we could be seeing a slightly tighter, but still pretty damn wide, ascending channel if the bulls are able to take it back upside. I'm cool either way. Just trade what comes. Well, no word from Take Profit on that 5 minute. Did any of you guys get emails from Take Profit Trader? I'm sorry, on the 5% test. All right, well, bulls, it looks like the bulls are kind of buying this aggressive ascending channel. See if they can hold on to that. Here's 18,000. John, up 200 on 3 accounts. Good work. Finish out the week strong. All right, bulls are really trying to reclaim this 20 EMA on the 2 minute, but ultimately, if you look as well, look, the 20 EMA on the 5 minute, those two are kind of lining up. Close, not exact. I mean, if you compare, right? The blue line is the 20. There's the 2 minute chart. There's the 5 minute chart. And here we are back to a 2 minute chart. All right, bulls trying to push this thing back up. We could see the early stages here of an ascending channel. We'll see if they hold. Headline from Trump. He just said this would be a perfect time for Powell to cut interest rates. And then he added, Powell is always late. See if the bulls can hold on to this little channel here. If they can and continue to widen it out to a few bars per test. Again, just for context here, I'm not a big fan of channels when they like 1 bar test and then a red bar test and then 1 bar test, right? I like to see kind of a more fluid move, at least a couple of bars for each test, like 2 bars, 3 bars, 3 bars. That to me is a lot more manageable. A little bit more controlled for reversion scalping, so that's kind of what I'm looking for here if we can get it. Otherwise, if we just break way through upside, continuation is still on the table. Just a heads up. John, I've heard if market is down 5%, some prop firms won't let you trade. Is it true? Yes. Depends on the prop firm. We're now sitting above 18,000. Here's a test of 18.1. Kind of a tier 3 level there at 18.1. Not too big of a deal. So we are now a 450 point move out of the hole in the last 20, 25 minutes. Hey Panther, welcome back. Yeah, this volatility has been great to see these last couple of days. Been a little crazy, but I'll take this over a 12 ATR last week. Here we have an 80 ATR at 10:15 a.m. That's great. Great to see. Okay, now on this 2-minute chart. Again, 2 considerations I'm currently making. The potential of an ascending channel that sellers might see, and you might see again, lower probability, higher reward to risk short traders shorting the potential of this channel. I want to see if we can make a test of that. And then the other idea that I currently have is continuation, if we can just break right through and snap up any hope of those lower probability shorts. Scooby, I'd like to know how to hold on to a position for that long. Hell, more than a minute, and I start freaking out and looking for an exit. You're probably trading too big. Hate to tell you, size down. And you'll probably have a little more emotional control, which is obviously important. Yeah, you give micros a shot. You can always size down to micros. There's nothing wrong with trading micros. There's tons of money to be made in micros. I'm trading micros right now. I think people like to trade minis for an ego thing, but I'm going to be honest with you, for most prop accounts, when you really run the probability of blow up with basic stats, basic trading stats, with most prop accounts, unless you're going with the really big ones, the minis are too big. Micros are a better idea for most people. There you go, AC. Good work. Yeah, you don't have to trade big size to make money, guys. You really don't. In fact, you in the early days, you should probably size down. I mean, hell, even long term, if you're still trading, I mean, trading prop in general, long term. Trading micros, man, there's nothing wrong with it. If you scale horizontally and keep the vertical scaling per account small, and then you scale out horizontally, you opt for that method, which I think is probably the way to go. You'll probably trade micros long term, and you can make a lot of money trading micros. Yeah, listen, I mean, listen, guys, they created micros for a reason. The minis started to get kind of big. So they introduced micros, and micros are a wonderful tool, and I think everyone should be at least giving them a shot. I think some people try to listen, the reality is some people will try to tell you that, I don't think this is like so common that people say this, but people have some ego about, I have to trade the mini. Why? Scale horizontally. Be more consistent. Trade smaller per account. Isn't this about the money? It's not about the ego. Micros are just a smaller version of the mini. So NQ is the mini. One contract, $5 a tick, $20 a point. The MNQ, which is the micro, is 10% the size. 50 cents a tick, $2 a point. Bull's really trying to push this thing higher. You guys see those shrinking bull bars here, right? You get a push, closing beneath this wick though. You get a shrinking bull bar, attempt at a reversal sequence, short-lived. And now we're trying to push into highs. If we can start getting a good bull sequence, I will begin to look for continuation. But again, I'm still considering here the potential for an ascending channel that the low probability, high reward to risk reversion shorts might be looking to bet against. So I kind of want to see that snap up. Yeah, Scooby, good work today. But yeah, if you want, give micros a shot. I think micros treat people better than minis, especially in the prop world. You have to understand that prop firms are a business, okay? And I think they bet. Essentially, props are betting on your ego not being able to take your time, size down, trade micros, find an edge, because they know that most people are like, I'm a big dog, I want to trade the minis. And that helps them. So don't be that guy or that woman. All right, 5 minutes from Powell. He's speaking 5 minutes out. Kind of sitting inside of this range here. Again, we're kind of getting a lot of, we're not getting a whole hell of a lot of good sequences here, which leads me to believe that we're kind of accepting this ascending channel a little bit. 2 touch points, not 3 yet. We'll see if we can get 3 touch points on, ideally, the downside. I like to see them separated by a bar or 2, though. Not back-to-back bars making touch points. I would count that as 1 touch point. See if this ascending channel can hold up. I'd be happy to limit order scalp that for reversion, but we do have Powell in 2 minutes. We'll see if he takes the stand on time, and I'll let you guys know of any headlines here as they come out. Powell, 50 seconds out. We'll see if he takes the stand on time. Now, something worth mentioning, guys, if we look at the 5-minute, you could make an argument here for this little descending level. Okay, and then we have kind of a mini attempt at an aggressive ascending channel. So I'm watching both of those ideas. See what we end up getting. A lot of back and forth, obviously. We have Powell taking the stand any second now. Look at the lineup here, guys. The 20 EMA is lining up very well on both the 5 and the 2. There's the 5-minute. There's the 2-minute. You just see that? Starting to line up a little more clean. We'll see if that ends up holding. There's the attempt at a break. We got Powell coming up here any moment. Here we go. Attempted to push down below the 20 EMAs. See that attempted that break? The 20 EMA is pushing through. Trend line attempting a break on that ascending channel. I don't know if the bulls are going to let it go that easy, but we'll see here. This is coming off as this is risk coming off as Powell comes up. And again, as we get headlines from him, I'll let you guys know. Now, remember, this isn't 2022, so we're unlikely to see moves off of Powell headlines like we saw back then, but it's definitely going to cause some volatility. ATR currently sitting, was that 80? Where is that? 85. Goodness, this time of day, that is beautiful to see. Reminder for context, a week ago, maybe 7 trading days ago, this time of day, ATR was 12. It's 85 right now. That's the average range of a 2-minute bar, so this is good to see. Okay, Powell. The Fed is well positioned to wait for greater clarity before considering policy adjustments. That's a very Powell response. I've been hearing that sentence for 3 years, 4 years. Powell says it's too soon to say what will be the appropriate path for monetary policy. So the Fed likes to buy time. Because the Fed's biggest fear is being decisive and then being wrong. Okay, they want to buy time and leave it open-ended so that in hindsight they always look right. It's becoming clear, this is Powell speaking, it's becoming clear that tariff increases will be significantly larger than expected. The same is true of economic effects. Tariffs are likely to raise inflation in coming quarters. More persistent effects are possible. Well, that's not going to help the Powell-Trump beef. He says the Fed's obligation is to make certain that one-time increase in price levels don't become an ongoing inflation problem. Yeah, Trump might have a heyday here about Powell. Okay, we're getting downside movement on the 2-minute chart. I'm interested to see how we act around this kind of like pivot point here. There may be a few stops here, maybe good for a 5-point pop through if we can get some of those stops triggering. Powell says most measures of long-term inflation remain well anchored, and the outlook is highly uncertain with elevated risks of higher unemployment and higher inflation. Let's see if the bears can continue this downside move through this kind of pivot point, trigger some stops, and give me a continuation sequence for me to start selling some rollovers here. This is a 2-minute chart. By the way, guys, on stream, if you're ever looking at this or you're unsure what chart it is, it's going to be either the 2-minute or the 5-minute. This look is most of the time going to be a 2-minute, but you can clarify by looking here or here. And then here, you're always going to have the 2-minute upper right, 5-minute upper left daily on the bottom. And then on these looks here, you can see there, it says 5-minute, it says 2-minute, right there, right? Giving up? You don't know me very well. No, absolutely not. The series itself, we're essentially doing the same thing live. Oh, yes, this is the Nasdaq. Powell says progress toward 2% inflation goal has slowed. Just waiting for a little sequence here that I can trade. Currently sitting one trade so far on the day. Kind of light on setup so far, but we're not done. Sitting up about 1,400 bucks so far today. See what else we can grab. Green every day for the last 2 weeks. A lot of base hit green days, but I'll take it. All right, let's see if the bears can work this out. I'll be back in 2 minutes. All right. All right, here we go, chat. Getting a little bit of a move downside. Should I start calling you guys chat like all the streamers? Minimum for personal account recommendation. You could, if you're trading small, you could probably start trading personal account. Honestly, futures with like a few $1,000s. I mean, hell, even if you want to trade like one micro, you could probably, depending on the margin requirements of the broker you use, you could probably trade a micro for like 500, $1,000. I mean, in the account, you would obviously need way less than that to just take the position, but you want to be have buffer. Powell says the incoming data through this employment report still shows a solid economy, and the Fed does not have a probability forecast of recession, but outside forecasts have raised that probability of recession. Scooby, a 6-minute trade. That's like an eternity. Good work. Alright, well, do we end up seeing a descending channel here? I'd love to see this thing widen out, getting kind of a grind lower, but really right now I'm kind of thinking continuation sequence, if we can see one here. Optimal ATR range for trading the 2-minute. Honestly, probably somewhere between, for me, it's going to differ. For me, I like somewhere between like 30 and 90. Big range, but below, you start getting below 20, it starts to get a lot more difficult. Below 15, it starts to get a lot more difficult on the ATR for the 2-minute. Why is it difficult to trade below a 15 ATR on the 2-minute? You don't get as much development, continuation setups tend to fail much more often, and ranges don't tend to really show strength in the rejections and bounces. You just get a lot of chop back and forth. And for me, some people might thrive in that environment. For me, a really low, like 12 average true range on a 2-minute chart is like a weak point for me. That's tough. Made it happen last week, but it certainly wasn't easy. Just see what kind of sequence we can put together here. Now, worth mentioning here, I think we should let's look at this 2-minute chart. You guys see, it kind of started back here. You get this pop through. I can't buy that rollover. Not only is it the first bull bar through the 20, but it's an oversized bull bar. We get shrinking, little reversion. Here, closed inside of this previous wick, right? Have to wait for the following bar. Shrinks, shrinks, reversion. I don't like shrinking bars on continuation, right? Now you look over here. Okay, well, we're coming into the 20 EMA, getting a lot of wicks, sure. Here, right? Potential continuation. Well, then you just get a reversion. So what we're starting to see a little bit here is those little breakout sequences starting to fail, which tells me we could be coming into a bit of a wider range mentality, even with a high ATR, which is totally fine. I just want to take continuation inside of the range when some kind of opportunity presents itself, ideally not coming right into a 20 EMA on both the 2-minute and the 5-minute. So just to kind of explain what I'm looking for here. Yeah, we're still getting headlines from Powell, but not, it's slowing down a little bit. I would think most of the important stuff is kind of out of the way. That's not a promise, though. All right, coming into a test of the 20 EMA on both the 2-minute, testing right now here, and the 5-minute, just a little bit away. Now again, watching for those low probability, high reward risk shorts. To start looking for this to form a channel. You might start seeing some selling pressure coming in for them positioning themselves. Really kind of struggling here on that 2-minute. You see that with that 20 EMA? We saw that reject a little earlier. There's the 5-minute look. ATR fading a little bit, still sitting about 72. There's the retest, the 20. There's the 2-minute look. There's the 5-minute look, coming into it on the 5-minute as well. Again, a break on the 2 is not necessarily free and clear just in terms of EMA trading, but I'm not a big trader off just EMAs. I just use it for added context. A lot of back and forth though, a lot of green, red, green, red. Powell says if the Fed finds tension between its goals, we will weigh how long it will take to get back to each, which is a difficult decision. We do not see the Fed's two goals in tension yet. He said it's not the 1970s. Typically, if one goal is further away, we focus on that. So I think Powell's really into the weeds now. So I think probability of a big bomb getting dropped has gone down. That doesn't mean he won't. But usually with Powell, the big stuff is out of the way quick. All right, well, there's the attempt, you see. On the 2-minute, there's the push through. And here, coming into the test on the 5-minute right now as we speak. Now this push upside, again, it has me thinking about a potential continuation sequence if we can push through really this region here. Kind of 18,000 to be honest with you is that region where those low probability, high reward risk bears might step in right here essentially. We can see a push up through there up toward 1850. All of a sudden I become a lot more interested in buying a rollover. A little higher than 1850 actually, now that I look at it again. I don't want to give those bears any reason to keep stepping in, right? I want to snap up all hope that they have of a descending channel forming, but if we do see that, I'll happily trade it. Alright, Bull's trying to take this thing higher again through 1850 on a good, not shrinking like we're currently seeing, on a good continuation setup. And I'd be interested. Right now we're seeing kind of a shrinking bull sequence, which the bears are gonna like. Here's the retest of the 20 EMA on the 5. There's a look at the 2-minute. Retesting the 20. Again, I really think the bears are looking at that descending channel as a potential to form. Now, what I guess we should do here, keep in mind, these only have 2 touch points. This is so aggressive, I almost don't want to draw it, but I will just for context. And then we have, you could argue 3 touch points now here. We have that. So this, to me, is what I think the bears are looking at. So a continuation sequence to the downside inside of that channel, that has me interested here. As long as we can stay out of the way of that 20 on the 5 and the 2 minute. 20 EMA, that is. Purple line. There's the rollover of that 2 minute bar. Okay, looking to see how this next 2 minute bar closes. Could end up being a trade setup for me here. If we can get a nice sizable bear bar, but not too big, closing at or very near its low to the downside, and here we're getting a bounce back into the 20 EMA. Bull's trying to take it higher. Now, in order for me to care, by the way, about shorting this retest of that descending trend line, this is a mushy rejection, right? It's not like we're getting a rejection all the way down and then coming back up, lining up with the 20 EMA on the 2 minute and the 5 minute. That'd be a beautiful entry. If we got a big push and then a retest, I would take that in a heartbeat. But here you get kind of a mushy rejection. Yeah, I mean, it's 60 points, maybe a little more. But back-to-back candle, I mean, that's the range that we're seeing on these bars. Which does, in my experience, decrease the quality of that setup, at least the way that I trade. Powell's been speaking, Sean. He has been speaking. He started at 10:25 Central. Who's that test? Yeah, so trade today taking on MNQ. This is currently the NQ chart. You should be able to watch Powell on YouTube, but I just have a news wire where I'm getting all the headlines. Yeah, so you guys see on the 2 minute chart here, what I'm really looking at, we're getting those mushy rejections, right? Weakening rejections on a descending trend line. I can't short that. I need to see it have a more definitive or decisive downside push and then a retest, which again would line up right with that 20 EMA on both the 2-minute and probably the 5-minute as well. I mean, that would be beautiful, but we're just not really getting that yet. Kind of seeing this flat bottom form here, which are notorious for breaking downside, by the way. See if we can get a bigger push, maybe a retest here. There we go, there's a downside push. All right, 1 minute and 20 out from the close of this 2-minute bar here. You can see that we're getting this wick. Maybe a few stops down below there. Kind of holding on to that wick. Kind of rated 880 is that level. Again, likely a few stops below there. I am watching that. There's a push through the wick, and now we're going to get a little bit of a pullback. Little bit, a couple of points. There you go. As those buyers buy up below that level. That ATR, man, I can't believe we're still sitting at 67. Just got to see some kind of sequence. We do have a nice channel forming here. Again, I need a little bit more of a definitive move or a better continuation sequence inside of the channel. That would be great to put something on. But today is a great day for volatility. If you guys want to look to pass some evaluations, you can do so in one day. Maybe be in a funded account by Monday, 50% off Apex Trader funding. Use code BIG. That'll always give you the best deal, by the way. No matter what the deal is, it'll just always be the best one, but that happens to be the deal right now. That goes for Take Profit Trader as well. Same code, same best deal always. But the bulls are trying to take this thing back up on that continuation downside potential setup that we had. I was looking for the next bar. All right, guys, listen, you know what I'm looking at this point here. Hope you guys have a great rest of your day, and every single day, if you haven't yet, subscribe to the channel, 8:15 a.m. Central Time. I am live. I will see you Monday. Have a great weekend. Enjoy. Rest up. We have work to do.